All right, well, hello everybody and welcome to another Pepperstone live event here. We're talking supply, demand and anchored VWAP today. So some very important topics when it comes to exactly where we're at actually with markets. As always, it's very interesting to talk about anything to do with stocks, commodities and cryptos and of course currencies right now because of the volatility coming into this period of time as well. And that's why we'll be talking a little bit about stats into October and what to expect ahead of the US election. My name's Thomas Atkinson. As always, I'm joined by Tyron Abella. Tyron, how are you going this week? Having a good time?
Yeah, good, thank you. Yeah, no, it's starting to get exciting, the markets at the moment. I think, are we about 5 or 6 weeks away from the election now? Yeah, I think
Yeah, for like
there's some,
40 something days, 45, I don't know,
yeah,
some
it's
amount.
going to get, yeah, it's going to certainly start to get rocking and rolling soon, I think. And I think stats are
Mhm.
very important when it comes to key events like this, especially as we're at, all-time highs at some of these markets. So looking forward to jumping in today and, yeah, trying to identify something that can give us an edge, Tom.
Absolutely. Getting edge and getting replication from markets is very important. As we probably saw during our last week expectations, we were talking about the idea that maybe we would have seen a 25 basis point cut, and obviously we saw 50. That didn't actually change anything about our trades, though, did it, Ty? So obviously the replication was on board. The trades that came through, we just took them in the directions that they were there in presence. And actually, it was a great trading week. But this is why it's so important to put your opinion at the door, because sometimes you will be wrong on the economic call, but you can be incredibly correct on the trade. And that's what a great learning lesson that was. And obviously, is for many people out there to not really pay too much attention necessarily to the news component and instead follow on the price action. So speaking of price action, we find a very bullish market this week. So where we were last week to where we are now is quite a big difference. You can see over here during the Wednesday component, we were about here. This is, of course, that big FOMC event news here on the 2 hour on the US 500, and we pushed higher and higher and higher and higher. And what I want to do was I want to begin by discussing the idea of anchored VWAP. So obviously we use anchored VWAP. Anchored VWAP is inside of your Pepperstone connected with TradingView platform. And what you can do is you can select it here from the list, or of course select in indicators, and it's usually under volume based. And what you want to do is you want to drop it on areas of interest. So what I like to do is I like to drop it on previous lows. So here and previous highs. And what that does is it creates kind of like a level that we could be looking for in the future for dynamic bounces off the lows. And that's exactly what we've seen here on the US 500. And I like to do it behind any major low. So you can see here, there's the low, went on to a big run. So it makes sense that if we do pull back, we may pull back to the anchored VWAP level. And you'll notice you get a bounce there, you get a secondary bounce, you get a third bounce. It can be a good little level. So the first tip is always put it behind the lows and the highs. And what we'll do is we'll pull this one back even further time. We'll actually pull it back to each one of these lows and just show how good it was behind this low. And then, of course, we'll take it from this low as well. And you'll notice here, this low, the market's never pulled back. So this would be one of those ones, Ty, which I would call as a sleeper anchored VWAP. So that means that if the market now comes down in the future, this anchored VWAP could be a very interesting point for us to be looking as a scalper or day trader at these levels, couldn't it be?
Yeah, most definitely, especially when it's coupled with previous supply and demand zones, which they quite
Mhm.
often are. So that would be a telltale sign. That would be, and it looks like it's a long way away from that, but it's actually not that far. So it's certainly something to have on your charts.
Yeah, there's two I'd probably have on my charts. One that's based on the FOMC event and one that's based on the lowest of the low. And the FOMC, the lowest of the low one is probably going to line up pretty well with, as you mentioned, the supply and the demand levels. So obviously here we have a demand zone. That's the most traded area I've got marked here, which we figure out using volume profiles, which we've done a lot of work on together here on the show. And then, of course, we've got a key level as well to be watching on the charts when it comes to potential turns. So I've said it's a key level for the bears. Why? Well, from a support resistance level, that is the major support. That's the lowest low before it actually went up. So you'll notice already by just like playing around with some of the anchored VWAPs, we're starting to build some levels of confluence. We've got the one behind the last low, which seems to be tracking up at the moment. We've got the one from the lowest low, which seems to be tracking well with our demand zones. And this helps us to create very important levels. And as we often talk about in the show, Ty, it's all about creating these levels of confluence, isn't it?
Yeah, most definitely. And the more you can get, it's like, basically building evidence for your trade. The more that you can get, the better it's going to be in terms of, well, not necessarily a success rate, because I mean, really, trading can still do whatever it does. Technicals can still flip on their head, but the more compelling evidence you've got, the better the chance the trade's got going for it. Like the more traders are seeing different things in the same direction, and that's really, really important. So it's always a really important thing to add as many as you can. We like to add, look, generally speaking, we want 3 or 4 things, don't we, Tom? Like we're looking for probably 3 or 4 different aspects. Absolutely. And the more you can get, the better. Sometimes you don't have to go over the top, but I think 3 or 4 makes me very comfortable that there's enough people seeing the same thing that we're going to get some backup.
Yeah, so this is that's the key, Ty. 3 to 4 different separate things to build that confluence, and of course, anchored VWAP definitely goes into that. I usually like to have around 7 to 10 separated indicators and reasons, and supply, demand, and of course, anchored VWAP are some of those. So with that in mind, it kind of gives us a bit of an area to be watching, I guess, over the next week if you're interested in markets. Potentially, if the markets pull back, especially S&P 500 to this level, there could be buyers around there. From a day trader perspective, you might be interested in that one that we just dropped before, and then, of course, put that in. But I think one thing's clear is that at the moment, this market is still quite bullish. So basically, this market is still pushing a series of higher highs and higher lows. And while I am personally seeing signs of exhaustion, Ty, in a mixture of large activity trades, which could be window dressing, which is basically where large transactions come into the end of each quarter. And remember, September is the end of the quarter, so there's large trades coming through. But also we've got some very large overbought indications as well post FOMC. So I'm cautious up here, but one of the reasons that we're cautious is because when we start to kind of lead in with supply demand, is you start to look around the markets. And one of your favorites, Ty, is always the US 2000, the Russell 2000. And you'll notice here that it has found a little bit of resistance. And we sometimes see this lead as a series of weakness or strength. And of course, if it does get through this high, Ty, let's talk that scenario first. Would that be incredibly significant from a supply demand standpoint?
Yeah, it would, and I think that would be a leading indicator for the S&P 500. It's probably set to make higher highs again, even though it is in uncharted territory as we speak. But this Russell 2000 and also the Nasdaq are certainly not in uncharted territory. So we're watching these ones very, very closely because, look, there's no question there's resistance right in front of it, and it's important resistance at that. So I think that this is probably one you want to be certainly setting some alerts for, Tom, because if you get a break above these levels here, there's a really reasonable chance that there could be a decent move on the S&P.
Yeah, I think all markets, especially the Russell, will play a lot of catch up. Remember, it's still quite behind. And I thought I'd just kind of show you a code as well that you can put on your charts, which is IWM SPY. And what this is it's just kind of like the ETFs for the Russell 2000 versus the S&P 500. And you'll notice it's been the S&P 500's time all along. Now that we've seen that huge 50 basis point cut, this could also open up a change in flow going through the markets when it comes to the Russell 2000. So very interesting resistance point. Obviously a supply area up here, which we've dealt with before. We've seen some rejection. At the moment, you'd have to say that the bears could be trying to control this up high level. And again, markets could come down. So what is an indicator that we could put on the charts? Well, of course, again, we could be using the anchored VWAP. And what we'll do is we'll drop the anchored VWAP behind some of the major lows, and I'll actually put it behind this low down here and maybe even this candle here. And what you'll notice is, again, it's lining up pretty well with what I've got marked as our most traded zone. Again, we've used volume profile. We've done that a lot on the show over time. So I don't think that'll come as any surprise to most of you that what we're trying to look here for. But this is, again, showing you more so than this red line here, which is the 20 moving average, different areas where we could be activating stuff. By the way, guys, if you have questions throughout today's live session, please make sure to ask them throughout. I do read the questions. We obviously answer them at the end and even during if it pertains to one of the charts that we're looking at. So feel free to get involved, ask questions inside the chat. It's always great to have your interaction with us. All right, let's move to the next one. But basically, the anchored VWAP here again showing that point. And what I'll do is I'll actually mark some of the old anchored VWAP levels just so you can get a bit of an idea of whether the Russell has been respecting those. So, of course, the most notable one that people would have would be below this significant low. And you'll notice that if you'd left that on the charts and you'd thought about this into the future, especially as a day trader or a swing trader, look how good these levels are here. Stuart says, are you putting the anchored VWAP at the end of the wick or at the body? You just put it on that particular candle, so it'll activate onto that. So it should anchor directly into it. So let's say you left it here, so it'll anchor in to that particular candle. So it won't you won't need to put it on the wick or anything like this.
Awesome. And if you want to learn a little bit more about anchored VWAPs as well, I know we've done a series on them. So if you go to the Pepperstone YouTube channel, there will be a whole webinar just on them as well. So if you do want to learn a little bit more about them in depth, yeah, definitely check out the YouTube channel and the library. Pepperstone's got a very extensive library that we've done.
These are just ones that I guess, I can see here live. So an example as well of a live anchored VWAP that a lot of people are using at the moment in the markets is this one here on Bitcoin. Now, I don't personally use it. The reason why you could leave it on the chart is because it was the highest high. So, of course, this was the absolute pinnacle of the move from Bitcoin over 2024. And it holds significance. Now, you will know there was some interaction with it, but recently there's been a lot of interaction with this particular zone. So a lot of people are pointing to that. I personally don't like it when it invalidates so many times, Ty. I find that a very poor signal. To me, what we saw on that Russell 2000, where I put it at the lowest low in that last swing, that hadn't invalidated. And I think you've got to consider this. So this is one that I've got a lot of people sending me at the moment saying, Tom, look at this Bitcoin chart. Look at the anchored VWAP. I acknowledge the high, but can you see how you wouldn't have had edge all the way through this point? So yes, it is doing this, but that doesn't mean that it was a good indicator. So whenever you're looking at these, you've got to say, would I have accidentally made a mistake or would I have been successful? This is why you don't use just the anchored VWAP. If you really think about it, we're at a level of supply or a resistance here for Bitcoin, and that's why it's having problems. I don't think it's actually the anchored VWAP in this case. Sometimes it will be the anchored VWAP as well, but in this case, it's probably not. So some ones that we would have on the charts, this one in particular, you'll notice we get one tap here, beautiful, two kind of in here, beautiful. What if it happens again? If it lines up with other things at that time, Ty, could that be a zone of interest?
Yeah, it could be, but I think that the key word is there, if it lines up with other things. I think that's really, really important. Definitely want to be crossing over on that one for sure.
Yeah, so just another chart here, and of course, us analyzing it with that anchor VWAP component. I think it's pretty clear that we have this level of supply up here. Now, whenever you're looking for supplies, you've also got to think about the left-hand side. So I saw recently a comment on the Pepperstone channel from one of our previous shows, and someone said, one of the biggest things you ever taught me was look at the left-hand side. So that basically means look at the storyline. What is the storyline? What is the psychology of the markets? In essence, if you're doing charting, you have to be actually saying, well, I'm going to look at this chart as the psychology of the market and what is the story of the market. And whenever I've done advanced techniques with people, I find that most people fail by not looking at the left-hand side and by not thinking about the storyline. So really the supply starts here, the market goes down with a massive sell, the market comes back up to this level again at 64.2, and it finds, of course, some resistance, and there's sellers start coming in, and of course the buyers dry up, and that again presses down. Now it becomes obvious at this point, but really the key level for this market to be breaking might not even be this 64.2 area, it's probably going to be the original supply, because this was what this is reacting over. And that's such an important factor. It should be you go back and you realize, oh, wait a second, the reaction is happening off this original one and not necessarily happening off this one over here. So this is actually the most important level on this chart at the moment.
Very, very interesting Bitcoin. It's definitely one to watch. It's at one of those levels where, yeah, it's an interesting one because you know what? It's reacting not so much with what the other indices are doing. It is its own beast at the moment. And, you know, we've said all along that if it does go and break to a serious high, it could be a little bit like gold, which I know we're going to touch on soon, where it could just explode. So it's certainly one to watch in the interim. You wouldn't be just jumping in on it, but these key levels that we're talking about here, these zones are very, very important. And if you're not watching it religiously, maybe set some alerts.
Yes, it's very important you consider those things. I'm just seeing here, so we've got a question coming in about the anchored VWAP. So the style that we've got is just set as the standard. There's a couple of questions saying I've got different platforms. This is high, low, close 3 in terms of the source. As you can see, that's the obviously there's different setups for it. This is just the one that we're using on this component. I find it to be quite good. It's up to you, but that's the setting that I've got there for the anchored VWAP for the questions that are coming through about anchored VWAP, because it doesn't always sometimes when you first put on the chart, you won't have like one green line or one line. You'll have all these other lines that will confuse you. Probably better to keep it simple. So if you want to set it up the way we've done, just pause the video there and have a look. Eric says, thanks. I need to see how to use the VWAP to make this webinar more. I think I need to see how to use the VWAP. Well, again, with the VWAP, we are doing it. We're showing you how to use it live. But if you want to check out the webinar and recognize the usefulness, as Tyron said, check out YouTube, Pepperstone's channel, Pepperstone. And then, of course, you'll be able to circle back and have a look at this. So whenever you're looking at the anchored VWAP, stick around, though, because the thing is when you're using the anchored VWAP, you really want to be putting out the lows and the highs predominantly. I mean, obviously, you can get really fandangly with it and you can start to really dive in. But you've got to think when you're a scalper and a day trader, you're actually more interested in the higher time frame key levels, and then you're interested in activating on the smaller time frames. Please never forget that. A lot of people get really carried away with very small structure. And what that does, and I want you guys to actually say this in the live stream here and even in the comments in the recorded session, someone shout out if you've had a problem where you've overtraded or you've realized that your scalping techniques are maybe more like coin flips, like 51%, 52%, 48% kind of losses, 52% wins. That's not good trading. And the reason I say that is because it mentally hurts you. Whereas if you're looking at the higher timeframes and then scalping based on the higher timeframes, remember, you're making the decision based on the largest, biggest trades in the markets and how they've positioned. And that really is a game changer, I think, as well. And I know, and Tyro knows this because we both did the same problem here. We started small and then we built up timeframes instead of what you should have been doing, which is starting high and building down. Remember, it's about understanding the structure. And I think almost every trader and every scalper that comes in starts small and then tries to build up through timeframes. Put your hands up, guys. Come on, let's not be liars out here. I know there's
everybody knows it. The one thing you've got to remember too, and I think Tom highlighted it as well, is that you've got to be really, really careful that you don't go too intricate on the time frames, in the sense that if you're the only one seeing something, it's not going to be very much value to you. So if you do your analysis on the bigger time frames and the VWAPs on, say, the daily structure, rather than some structure that you're the only person looking at, it's not going to be as significant as 100,000 people seeing the same thing. So be a little bit mindful that you're really. It's a misconception, Tom, where people think that a closely guarded secret is something that no one else knows how to trade. It couldn't be further from the truth. The more people that are seeing a trade and understanding what a market should do, the better the chance there is of that market moving in that direction. So if you go a little bit too fandangly, if you like, and try to be a little bit too cute, you might think that you're analyzing better, but really, if you're the only one seeing it, then it's not really going to do you much good, because you're not a market mover. That I can promise
you. Yeah, exactly. So great questions coming in here. Stuart put both hands up because he's done both those problems. A few of you other people out there have also done that. Roger says, at what point did the zones become invalidated? I believe when it's broken through and closed on a significant time frame. So let's just, we won't actually use the dollar index here, but a good question came in. I'll answer the question first from Michelle. And basically it says, should you put the anchored VWAP on major news? The answer is quite simply yes. It is actually a bit of a hidden secret that it is a very good concept to put your VWAP on major news events. And the reason you would want to do that is because something significant often switches there. And if there's big volume switch as well, then that can be a very good turning point. Sometimes it'll also be the low or the high of the markets. But yeah, putting it on things like non-farm payrolls. Now, this isn't any news. We're talking serious news. So non-farm payrolls, the FOMC event can also be quite good. Somebody here saying also that they believe that one's lined up on a few different currencies and stuff as well, which is cool. And then, of course, you want to be also focused in on, I would say, CPI up until this point. Probably now you want to start lowering that one off. But non-farm payrolls is a classic anchored VWAP moment. So you can actually come in after the Friday, because remember, it comes out every first week Friday in the US. And for no one that doesn't know, it's the jobs numbers in the US. And then you can put that on over the weekend in your analysis with the anchored VWAP, and that can set up a lot of trades for the week ahead. So that's big brain thinking. I like it. Very good. A lot of you coming in saying you've made those mistakes, which is absolutely good to see you clearing that. So that's good. All right, let's go to the next kind of chart here. Now, this is actually dollar index. I'll just quickly show dollar index and the 20 moving average, which we've discussed. Now, obviously, we've put some anchored VWAPs in here. So what I'm going to do is I'm just going to chuck some anchored VWAPs here behind the green highs, just so you can see how it's consolidating underneath those in terms of closes. I know these are here, some of these, so but it's also going to make sense that that's there. But look here also on the way down. This is our standard 20 moving average, and this continues to be a sell-off from the 20. Now, it's a 1, so 1 respect, 2, and as we always say, 3, 4, 5, every single time it's doing this up until it closes above is going to be significant. So it's the same thing with the anchored VWAP. Here, we have not closed above on significant timeframes, so I'd say that anchored VWAP from this high here is still valid, all right? And usually I'm looking for things like dailies to close up against if it's a significant shift VWAP. So yeah, some good stuff there, and great questions, guys. All right, Ty, I want to just quickly go over to some markets that have had a lot of interest in them over the last couple of days. Now, is anyone aware out there, of course, of the big moves in something like China, thanks to their stimulus packages coming through? And obviously, this is creating a massive, what we call short squeeze. Now, you might think, oh, well, I can't get involved in these particular markets because the news was, came out, moved too quickly, and I couldn't get involved. You've got to remember that there's a couple of interesting things here from today's session that we can play on this. First up, of course, this is the resistance or the supply. So you can see here why possibly it's found some selling around this zone. So it smashed straight into that. This is the HSI. You can see that when it cleared this level of supply, which I had marked on the charts, this became the most likely scenario. Now, it ended up happening over about a day and a half, but which is a significant move. You can see the volume coming in big time here. But there is actually a setup down below here, Ty, which is fully replicable. And there's actually a double setup on this particular chart. So you've got setups on setups on setups that are all happening before the news event. And I think this is just a great thing for you to understand when you're a chartist, when you're someone that's looking at these charts, is that you can actually get involved in the flow a lot of the time by having your eye on weekly, daily, 4 hour, 2 hours. And if you sometimes get lucky enough to have scalps, because there's actually scalps and day trades in here, and they're based on these higher time frames, you could then potentially leave some of that on as you descale your position. And that can all of a sudden become very significant, can't it, Ty? And that doesn't mean you're taking more risk. You're doing nothing. You're literally just leaving it on and recognizing that as you achieve certain milestones, as you achieve this high and this high here, okay, that could be take a bit of profit off. But once it clears this, because of your knowledge of supply, demand, and also resistance support, you'll notice this is the next most logical level. So imagine if you were on this, and this will happen again and again and again. It always does, yeah, Ty?
Absolutely. It happens in every market, whether it's currencies, indices, stock. You've just got to understand the moves and understand what you're looking for. And when you can identify them early, you can actually preempt the news quite often. In fact, as a rule, we don't trade the news anymore. Do people trade it at the start? Absolutely. We did. And it's fun doing it, but it's not really a trading strategy. But moving before the news happens, and understanding the technical signals that you're really waiting for to actually get involved in a trade can be very, very powerful, because quite often what we find is that the news will actually help your trade. A lot of the time, if you're trading in a particular direction off a good setup, the news quite often complements what you're trying to achieve. And that's not necessarily trading the move on the news. It's just that's what the market does. For the most part, it generally tracks in the direction that the technicals were kind of instigating anyway. So it can serve to help you, but you don't want to actually trade it just for the sake of trading the news.
Yeah, I totally agree. I always say that the reason we have patience react don't predict as a comment is because patience and reaction to of course the news can be some of the best moves as well, to actually see sometimes the liquidity traps or the big kind of traps that happen there. So HSI was another one that actually had set up before the actual big news from the market, and you could already see the volume was starting to improve. So one thing I would do here is I would put an anchored VWAP behind the low, and obviously it's trying to catch up to price now, but this could be a very interesting anchored VWAP to have on the charts. And whenever you're looking at a new chart with anchored VWAP, what I like to do is I like to see whether it's respected or found this point to be good. So you can see here on the way down, the anchored VWAP was actually better than the 20 moving average on the daily. So anchored VWAP, think of it as like a new modern day 20 moving average in some ways because it's price and market adaptive. And this is why so many people are starting to use this particular method. Now, I'm more of a fan of anchored VWAP than anything else because you can put it on. It's kind of like volume profiles. I like fixed volume profile. I don't like visual volume profile. I find that people make huge mistakes on that. And this is just, it's great to be able to recognize those major turn events and then to see the replication that can come through it. So that's, I didn't know that was there, but of course, well, I kind of did because I've charted it before and I do use this indicator. But you know what? Like you can see how visually representative it is and how therefore important this low one could be in the future. So two that I would always have, I've got a lot of them inserted there, but let's put another one on. We'd probably put that one on as well. And that was good up until it closed below here. So because we know it's invalidated it already, I'd probably be less likely to have that one on, and instead I'd have this one on. So yeah, be interesting to see how this plays if it does end up pulling back into that area. All right, well, let's.
And I think probably a good lesson just on that, Tom. Sorry, before you go on, probably just a good lesson because obviously we're clicking through levels very quickly with the anchored VWAP. Don't ever be afraid if you've got a key level there to pop a line there and label that line and leave it there for the future. So you don't have to have anchored VWAPs all over the place. You can actually, if you see a significant level that you want to potentially mark up, just pop a line and actually label that line and leave it there for future reference until you do no longer need it. So not a bad idea to label. It's never a bad thing to label with something that's meaningful for you, a particular color. That goes for support and resistance on bigger time frames as well. Something that's significant to you so you understand immediately what that actually means.
All right, well, let's move over now to the metals because, of course, a lot of people are trading the metals right now. We've got some big overbuys here on gold. Now, of course, if you've been watching this series since its inception or watching us live all of 2024, I'm probably one of the craziest gold bugs this year because I think there are so many strong stats behind it. But again, it's another one that you can start to apply things like anchored VWAPs behind. And again, that can help you. So here's the low. That's the kind of first one I would put on. I would also put one on this low down here and probably also this low down here. And because we know this one's been respected, see the respect here, this would be one of my target. These two here would be my two main zones that I'd be looking for day trading for potentially spike ups if we do pull back. And then, of course, this one, seeing how it follows that 20 moving average, because we know that the 20 is also seeking out that. So if we have the 20, the anchored VWAP, a supply or demand, again, strengthens the position. Now, gold is quite bullish. It's even exceeded my initial, I would say, day trade swing kind of TP zone, which you can see here. And we saw a little bit of reaction off that, and then it's gone higher. Obviously, I have bigger plans for gold based on macro, based on data. And what I want to just quickly talk about here is the data and the volume. So Ty said it's quite important to understand this. Remember that in October into US elections, that is historically the most volatile month of the year. Now, I don't think we're going to go to volatility like we saw in August because that was statistically quite rare. VIX 65 is, I've seen it 3 times ever. You've probably seen it about 3 times ever as well, Ty. I don't even know if it started like that high other than maybe the .com crash. So, very rare, very rare. So that's probably not going to get beaten. Never say never, but it's probably not going to get beaten. But what does tend to happen is we're seeing at the moment this what we call vol structure, and vol structure is happening inside of the VIX that's showing us that there are a lot of people are hedging and placing bets on increased volatility into October, and often that does become sometimes a self-fulfilling prophecy. So as we're so high here in gold, we're so high here in the S&P 500, we're at resistances, it just makes you say, well, wait a second, I might just be looking at the markets a little bit differently here. Let's wait for the price action to catch up with seeing whether there's a turn at this point, and also what if we get pullbacks to some of these anchored VWAPs? Maybe that will become the opportunity. So I think that the key here is, again, to have patience and have no FOMO, because October is well known to be up, down, and all around month.
It's going to be exciting. I can't wait, actually.
Yeah.
The next 40 days are going to be, we've done quite a few elections now. This is probably, it would be our fourth as active traders. And
08, 12, 16, 20, fifth,
yeah. So I'm looking forward to this one, because now we're going to be applying the knowledge that we've learned over time to really probably nut down on it. I'm looking forward to it. And I think the volatility is real. It's different to the 2016 election because the market was so low at that point. Like, I'm not expecting a market to go so high that it's going to put on, like 3,000 points or anything crazy like that, because I think the market's just too high for that. But we could see some very erratic behavior, and I think that gives opportunities for a lot of the day traders and scalpers to actually trade within those boundaries right up until D-Day, I guess.
Yeah, so well, that's right. It's going to be some decent volumes there. So again, just if we're pulling down to smaller timeframes, these are the kinds of ones I'd pull. Last low here, therefore I'd look at that. Last low over here, therefore I'd look at that. And if we went over to something like silver, you'll notice here that with silver you've got again some significant breakouts. Now I think silver is the really interesting one. It's gone through 31.50. It's hit into the supply, which was previously over here, which we didn't actually quite tap before. So I'm kind of in two minds. I would guess that silver has potentially broken out to the upside and therefore going towards 34.60, but technically it does still need to breach through this area. And this is probably one of my favorite charts of the week in terms of if silver can really get a little bit more of a skedaddle on the upside, it's got some catching up to do versus gold. This has been one that we've liked on the show from a technical base for a little while now, and it's hitting into, I would say, the most important supply area that we've had in probably months.
Yeah, and also, I mean, I think we've spoken about it in the last few sessions, but there is also an inverse head and shoulders there that is effectively, not only did it break through the neckline, but it came back and retested it. That meets three levels of our entries for inverse head and shoulders: the standard entry, the aggressive entry, and also the conservative entry. So things are looking good for silver. I agree. Look, it's got work to do though. It needs to get past this zone. I think that, but if it does, similar to what we talked about earlier. If we get a breakout of this level, anything could happen. Yeah, and it's always the common warning that we always give with silver. If you are going to trade it, make sure you understand the contract sizes. It's very, very important because it can bring you undone if you've never traded it before. So always have a practice in a demo account first to understand the contract size and know exactly what your risk is. It's very, very important on silver because it's very different to gold.
Yeah, very different indeed. So just to show you what you do with silver with anchored VWAP, again, if you were to put it on that, actually this is not the real silver code. I'll show you SAG USD. Here we go. All right, there we go. And if we pop this on here, you'll see, okay, this one not so good because there was no obviously reactions off it that you would expect. If we took the low here, which would have been another one that we would have done, a little bit of reaction off it initially. That's often the first one is often the best. So if I was using anything, I'd usually use the first one. We can go over here as well. No touch yet to that major low bottom. So that could be an interesting one in the future, plus each one of these lows as well. So some significant stuff there to be looking at on the charts and building into your confluence story along with the other reasons. All right. Well, we'll go over to a couple of currencies here, I guess. And actually, we'll just quickly do oil. So oil has also been a bit of a anchored VWAP special in recent times. Again, going behind each high is the kind of keys and the lows as well for the low end. So if you were putting one on the bottom, you'd pop one down here. And again, if you'd done that, look where we saw a price action come back to just a few days ago. So the first touch in particular is quite significant off these high lows, and you kind of got a bit of a trapping here of it. Obviously, from a supply level, about 74-ish area is a good level of supply. So this will be a important point if the market is to break up. At the moment, because it did break through that daily 20, which has been quite significant on the way down, I would say it's actually more long than short in its oversoldness. And I think the small time frames are still looking towards the bull end. Any opinions on oil, Ty?
I love oil, and I have loved it for a long time. This year, actually, I think it's been technically beautiful. I'm a little bit more bullish if we get a break up above that 70, sort of 250 to 73. I think it could go all the way to 78, actually. I think that's the next very heavy resistance. I agree with you, 74 to 75 zone is going to cause it potentially some issues. But I think if we get a break up, it's a role reversal zone. There's no question about that. We're sitting at pretty heavy resistance because that was support for a long time at around that sort of 72.50. But if we get a break above there, I think it's really open slab for potentially $5 or $6 on the way up. It's been very, very technically sound oil for quite some time now, so the levels have been respected. I think we've got this oil trade predictions right quite a bit, haven't we, Tom, in these webinars, and we've been very happy with it because there's nothing better than when something as big as oil or gold or any of the big majors are actually behaving themselves from a technical standpoint and from levels, because it makes it very, very easy to trade, and the replication of those trades is quite comforting to follow for a lot of traders. So it's been very, very good up until now, and there's no reason to think that it won't continue doing that. So just respect the levels, but I think understanding where the support and resistance is on oil is extraordinarily important in order to trade it successfully at the moment.
Yeah, it's very important to understand the key levels. So we'll see whether it can get through 72.50. Some good signs of last 24 hours getting through 71.80 zone. Metals obviously improving across the board. You see copper here absolutely nailing into that 455 earlier in the day. Again, hitting into those supplies, hitting some serious overbought action. This was one we've talked about for weeks and weeks and weeks. Actually beautiful trading on copper. Very rare to get great copper trades. This was really, really nice to see. So some tough trading generally here, but very, very good and actually not too bad. All right, let's go through some others. For the Australians out there, let's have a look at the Australian US dollar because, of course, this is the talk of the town in some ways due to the fact that the central bank is not being prepared to do any rate cuts in comparison to the Federal Reserve and others. Now, we could all have a comment about that. I mean, a big reason is because the RBA wasn't able to push rates as high as they needed to probably to stop inflation. So we've got this kind of problem here where households are suffering, but at the same time you've still got the kind of problematic inflation. But we've hit that supply, and I don't know if everyone's looking enough at the left-hand side. So again, if you're a trader and you haven't seen that, and you're day trading and you haven't seen this resistance or this supply high, then you're probably not zooming out enough. This is why it's so important. If you didn't recognize that this could have been a key level, then you may not have, on the smaller time frames, because you're only looking at this part of the screen, recognize that key zone. So I don't blame people trying to short it around here. I think the trend still remains quite bullish. And at this point, pullbacks probably going to be met by bull demand. And I just noticed here what I wanted to do was get that little trend line going on. Quite a solid trend line channel on the way up, isn't there, Ty?
It is. Yeah, it is. Look, it's very, very important to understand that resistance is right there. Yes, it's a key number. It's been very, very heavy resistance. And why I pay a lot of attention to this sort of resistance is that when it did actually fail at that zone, it didn't just fail a little bit, it failed a lot. Like every time it touched it, it literally capitulated. So it's a very, very important level. Look, the dollar index, as we saw before, is on the verge of collapse. It's not very far away from collapsing, which leads us to believe, and I'm talking about 100 points, by the way, I'm not talking about Armageddon, but 100 points down on the dollar index is probably going to see a significantly bigger move on the Aussie, even from here. But the level has to be respected. For mine, I would rather let someone else do the work and let it test it above that level and come back and basically rebound from there. I think that's a far better trade because then it has actually broken through that zone and you're able to take advantage of a pullback to that level of around that sort of 68, 80 area. that's the preferred trade for me, but that's just our style. I think we like to be a bit more conservative. If it does that, it's a far better trade than the initial break, because there is still a big danger here that it could reverse. And if it does reverse, the previous reverses, or reversals, I should say, that we've seen have been significant, many hundreds of pips. So just be mindful of that.
So I just dropped a couple of different anchored VWAPs there. I put one behind the last low, so you can see it's here. And obviously we're getting close to that price here at this point. I also put one down the low at the big major swing towards the upside. I think this one will be well worth tracking in the future and having potential lookouts. And obviously we've got these swing low, swing highs. So each one of those, sometimes the first touch can be significant. Downward trend line, or in this case upward trend line, is also big. And as Ty mentioned, break of the upside and then potentially move around. Well, it's that point of time again where if you have questions, please feel free to ask them in the chat and we'll answer them right now together. Ty, do you have any particular trade of the week that you're looking at in terms of a chart that you think is just absolutely looking amazing?
Yeah, it is actually the yen. And it's been a favorite of mine for the last few years. I like it because it works, and I like things that work as a rule. It looks to me, like it's trying very, very hard to break above that 20 moving average on the daily. So, and if it does that, look, it's right at a point now where, we saw the pattern. Look, we saw the morning star a few weeks ago, and that was great. It did its job up to the 20 moving average, but now it's really fighting it. And I think it's had a couple of weak attempts to get past it, and it's failed. But this last candle is looking quite strong. So I think if we see a bit of momentum, a lower high, well, on a lower time frame, higher low sequences. I saw it even on your 2 hour one there. I know your 2 hours is one of your favorite charts there. Happy to go to it. I think that any form of upward momentum is going to be good for this. And you can see here, it's already trying to cycle higher. It's been doing it. If we get a break above that 144.50, I think that the potential is all the way to 146.50. It's got a couple hundred pips in it, I think.
Awesome. Well, I like the fact that it seems to have overextended on the short end. Obviously, the sentiment is very bearish on this, according to so many people. But as you've seen, the price action is completely different. So automatically, it's trying to, if it gets above this point you just mentioned, that's going to take out these weak highs. Very, very significant. Yeah. Just put an anchored VWAP off the low there, by the way, guys, just so you can see how it's interacted on the way back up. And you'd also put one behind this low as well if you want to see pullbacks from, let's say, potential breakouts and then pullbacks like Ty mentioned before. Again, anchored VWAPs can be quite cool and handy there. So for the stats coming into October, Ty, one of the questions we have here is what are your thoughts about will we get like a VIX over 20 during October? Statistically, it's very possible. I think that we're probably not going to trade outside of the general ranges for now. So the best thing to do whenever you're considering whether there's going to be an incredible amount of volatility on the markets is to actually think about the logistics of the most important market in the world, which is the S&P 500. And if you look at the S&P 500, I would argue that the trend is quite bullish. Even if we get pullbacks, there's going to be generally a couple of very important areas. And for the VIX to get above 20 or actually to look really bearish, generally speaking, you either need flash crashes or you need markets going into a fearful level. And to take a fearful level usually means you're breaking a key technical zone. So you've got to remember that. When we saw fear over here, we broke the key technical zone, which was where most people would think there was going to be buys. Then we broke this level and we got even more fear. So fear tends to crescendo in the fear of the unknown. And that brings the VIX up. That's why they often call it the fear index. So for us to see that, it's probably going to take a fair bit. It's not impossible. But at this stage, the VIX will probably sit between 15 and maybe 25. It's possible.
Yep.
Okay. All right. Well, thank you so much, guys. Thank you for attending the Pepperstone session today. We hope you enjoyed it. We'll be doing another one next Wednesday covering other topics. Today, we covered a little bit of anchored VWAP. Remember the highs and the lows and the most important piece of news, such as non-farm payrolls. Start implementing that on your charts. Have a look at it on the smaller timeframes and see whether it gives you a little bit of extra confluence storylines. If it does, maybe it's something you could consider. Supply demand, obviously, we've done plenty of videos on that, so check them out on the Pepperstone channel. Give it a thumbs up if you're watching this in replay mode, and we'd love to see you here live to ask questions about the markets as well next week. So yeah, from all of us here at Pepperstone, thank you so much, and we'll see you next Wednesday at 8 p.m.
Brilliant. Thanks, everyone.
Thank you. Bye for now.